Good afternoon, everyone. Happy Sunday. I'm Jabari and I'm here with Rich, and this is Relative Edge, where we measure assets value relative to other assets. So today we got an exciting day, and we're going to dive into a few things in the market. We got a lot of
Yeah,
interesting things to talk about. How you doing, Rich?
yeah, doing great, doing great. Happy Sunday. Good morning, good afternoon, good night, wherever you are in the world. It's definitely going to be an exciting day, exciting markets, and this is Relative Edge.
Yes,
Manage
sir. Yes,
risk,
sir.
manage the risk at all times.
Yes, sir. So last week was very interesting. I just want to talk about a few things relative to the dollar and the 10-year yield. As you know, those are the mommy and the daddy for the markets. Um, so we're seeing more and more fear along the lines of this war. And usually when there's fear in the markets, two things happen. People look for safety in the dollar, so that causes them to buy dollars and sometimes sell their assets. So you'll see them get rid of their currency and even buy dollars. So you'll see usually the dollar, the DXY, which is in the top left-hand corner, spike, which is exactly what we're seeing. But the one caveat is people usually flock to bonds as a safe haven asset because it is the world reserve currency as of now. And it's considered the safest currency. But right now we're seeing bonds sell off, meaning that interest rates are going up. Remember, bonds and interest rates trade inversely from each other. And the reason why this is weird is because typically in this situation, when there's fear, people would rush to bonds, rush to the dollar as something that is safe. But we're seeing interest rates go up, meaning that there's actually less demand for these bonds, that they have to raise interest rates just to entice people to buy these bonds. So it makes us think that the reason why the dollar is rallying is not necessarily because people are scared, which that may be part of it, but maybe the larger part of it, the larger reason is because of the petrodollar and its relationship with the dollar with oil. Oil might be just dragging the dollar up right now. So I kind of want to see how this all resolves this week. Right now we got the dollar opening up higher. It looks like it's kind of losing steam, but we got to keep a close eye on that. The top left-hand corner. I expect right now, if you zoom out, and one thing I want to keep in mind too, I'm going to zoom out to this longer term chart, Rich, because I saw this past weekend and I kind of wanted to note it. But
Okay,
there is a very strong resistance and support at the psychological level of 100, right?
okay.
So look at this. I'm just going to draw a trend line, a horizontal trend line, and look at that. We even if you go back to 2015,
Hmm.
it showed very strong resistance on 100, bounced, rejected, bounced, rejected. Now look at this. We pushed through in 2021 or 2022, and since then we kind of been above the 100, which was previously resistance, and now it's support. But last year, look at that, we dropped below and we're forming a bear flag underneath. So this 100.5 level on the dollar is a very critical level, which
Hmm.
I'm very interested to see if we find resistance here or if we break through and continue the uptrend. My guess is that we get rejected here, but we have to wait and see. We can't make assumptions. We can't get married to a narrative. We have to watch what the chart is telling us. So we did
Hmm.
close right underneath there, but that's something we want to keep a look at. Um,
Absolutely.
and you can see we stopped right there. And then we look at the 10-year yield. This is interest rate, the overnight lending rate for banks. And you can see this is an overall downtrend since 2023, November 2023. Let's zoom in a little bit more. We're trading in a downward parallel channel. And within that downward parallel channel, we are forming a pennant, meaning that the highs are getting lower and the lows are getting higher. So price is
Mm.
converging. And then we broke out of that pennant and we were trading underneath it for a while. And I'll move to the daily chart so you can get a better idea of what I'm talking about. And we traded underneath this, bounced underneath that pennant, bounced, broke back into that pennant, and then was eventually rejected. And now look at that, we're bouncing right back to where we got rejected from previously at that pennant spot. But we were not able to close above where we previously got rejected. So that's an early signal that maybe the Fed may be stepping in, maybe being that lender and buyer of last resort that they always have been, and purchasing bonds to, kind of show that there's more liquidity in the markets, kind of calm the markets down. So that's one thing I want to keep in mind. And obviously, we need to watch oil because pretty much when oil is rising right now, it's taking everything with it. Um, and then the VIX this week. One thing with the VIX we want to keep in mind is that whenever the VIX gets above 30, within the 30 to 80 range, that typically marks a bottom in the market. So right now we closed at 27 last week. I want to see if we go any higher this week or if we start coming back down. That's going to be a key. And I am really curious about gold and silver this week because last week they closed much on their lows. And gold, you can see, took a nasty pullback the last 2 weeks. Actually, not as bad for gold, but for silver, we took a nice dump. And with silver, it's relatively concerning because we are we were trading in this upward parallel channel. You can see here in the bottom right hand corner, upward parallel channel, and we broke out of it. We actually broke out of it.
Uh,
But the thing is, we did not fall below the previous resistance. We still closed above it. And look, it looks like right now we are
I mean previous
forming,
support, right?
yep, support. Thanks for the correcting.
Yeah.
Yeah, so we are at support right now. I really want to watch to see if we go lower because if we drop lower on silver, we could move as low as 63, um,
Hmm.
or even to the previous breakout point, which was 55. So that's something we're definitely going to want to watch. The
Hmm.
dollar strength is going to definitely determine which direction this moves. Um, but I want to see for me to get bullish in the short term. I'm very bullish on silver in the long term. But in the short term, I want to see silver get back into this bullish channel and can kind of continue its upward trend. Until then, I want to kind of just wait and see.
Actually, the channel is acting correctly with what's going on because on the upward trend, when you trade it in the channel and you break to the, is actually bearish.
Mhm. Yep.
Yeah, with the price structure, what it did when it spiked up and spiked down and it's causing this trend or especially this break, in addition to adding the increase in the dollar value, which is, I'm using the air quotes, you can't see me, artificially be increasing because the oil is increasing in price.
Mhm.
To a point whereby, which I'll show you later on, after Jabari finished with these charts, going back to 2018, talking almost 8 years ago, eight
Mhm.
years highs. And if it really gets bad, um, you're talking a 30% move from here
Yeah.
advancing. Yeah,
So, I mean, the key for metals clearly is watching the dollar, watching interest rates. Lower interest rates means more money is being printed, basically. So that's gonna bring the dollar down and push metals up. So very key levels things to watch. It's important to understand the triggers. Um, and then
yeah,
I'll touch on the SPY briefly, and then I want to
mhm,
let you kind of talk more about that,
sure.
Rich. And just last week we saw the SPY kind of break and close at new lows. Um, right now it seems like people are selling into strength. So every time we have a strong bounce, we keep getting rejected. So bounce rejected. And we're forming higher or lower highs and lower lows. So right now, it might be a time to be careful holding risk assets. There seems to be
Mhm,
a very strong air pocket
mhm,
underneath the stock market, where the next closest support you could say would maybe be 650 or um, previous high or its previous high. So be careful on here. Definitely want to wait and see what happens with interest rates, the dollar, and the VIX before you make any choices to buy dips here. You kind of want to trade the trend, but I kind of want to let Rich take over from here and kind of
okay,
show me what you're seeing with some of these risk assets.
absolutely. Let me bring up my screen and I will actually start where you left off with the SPY. I'm on the weekly chart right now, and if you crawl in one of the videos last week, you will see that. Take this up a little bit clearer. That on a weekly SPY, this tail shows that at the beginning of last week it traded up, but then it ended negative at the end of the week. So that goes in line with what Jabari was saying. We got a gap here that always usually fills. We have a rising wedge that is bearish, and a measured move coming down to 642.93 as a target. So it's going towards plan. Things are definitely risk off. Um, so with risk off, two things happen. What are the most So you're talking about capital preservation. Um, as you know, Nasdaq, Nas 100 with heavily weighted with stocks like Google, Nvidia, Amazon, Apple. They having good or mixed earnings. They either trading sideways to down too also. So it's like
Hmm.
risk off there. Um, if I move to so this is as a standalone the SPY, but speaking of risk, just combining that with Bitcoin. Bitcoin is still considered a risk asset. And if I do a Bitcoin SPY pair, let's do a monthly. This is also a recap.
And just so
Oh,
what
sure.
the
Go ahead.
viewers, just for the viewers, what's a Bitcoin SPY pair?
Yeah. So basically, when you do a Bitcoin SPY pair, we're doing a comparison of the strength of Bitcoin. The first part. Bitcoin. Think of it of buying Bitcoin as the first part, and then you got a forward slash SPY, and you're shorting SPY. So right now, the strength is Bitcoin is stronger than the SPY. However, this monthly chart, you see a pickup with Bitcoin, which is actually cyclical. In March, it usually has strength. Um, and that's why you see it's green here. And also, if you go back to March of 2022, which is the last going into the bear cycle, as I put it in October 2021, is the top of the market, and October 2025 is the top of the market last year. And then when you go forward into March, which is here, you see a green candle where we also saw February, but in this case, our February was red, but definitely March cyclically, it's a green candle, and we're seeing a push up. And I'll go over Bitcoin individually as a standalone, as you saw the SPY before, as it's rolling over with the risk off. Here is a Bitcoin as a standalone. Let's zoom in a little bit more. Let's go to the daily chart. So currently, right now, this is a daily chart, and Bitcoin, if you didn't know already, trades 24 hours a day. As you can see from last week, there's a accumulation, but this is, and we are 2 weeks in. There's another 2 weeks left for this month to end. So you do see some selling with these tails, although it's advancing and staying within this. Being that we're in a bear market, this is a bear flag,
Yeah.
and um,
Can I
as
can
you
I
will
add
see,
something there?
okay, say again.
Can I add something there?
Sure, absolutely.
Yeah, so you see that down move, if you see that big red candle, what is that like on February 5th there?
This is yeah.
February 5th. Yeah, so that is a big red candle. When we see big candles like that, we call that a control bar. And as you
Mhm.
can see, that box that Rich drew, that all those candles are inside bars. So
Yep.
that means the price needs to make a decision if it and until the price closes at or above or below that bar, then we can determine which way the price will move. So right now, this is all inside bar activity, which right now is actually a bearish formation, but we have to see whether it closes above that high of that bar or the low of the bar.
Yeah, absolutely, 100%. And we can still move up, but cyclically, as I move into the monthly chart, just going to show you something here very interesting. If you look at, let's zoom in, this is March of 2022, and this is March now, which we're still in the bear market. As you can see, it's it trends down more to also. So we're looking, and as the markets are in fear and it's risk off, and Bitcoin is still in a risk asset, it's more likely that we're going to see some more downturn. Uh, so if you look at, if I can, a SPY last year, you may have see this last week. This is on a monthly chart. We're seeing we're seeing a structure very similar to last year. As you can see that February of last year, we had a doji, 2025, 2026, we have a doji. And now in March, we're trending down. We closed below the doji, and also the closest this moving average is a 7 period moving average. We're trading below it. And being that we have a number of factors, the news, the war, and in terms of risk off to also, and Jabari also mentioned the VIX. If you see something anywhere between 30 and 80, we hit 80. I'm sure if you look back in April of last year, we traded down and we moved up and continued advancing. We probably spiked at 80 last year, at least in that range. And all the sellers were exhausted and moved up and continue to move up. So based on the current price structure that we are in right now, we still have 2 more weeks that I'm expecting something similar or something like this to also
Mm.
that. So moving to um, did a pair of, this is the NASDAQ SPY pair. And if I move to the monthly, let's reset that. Uh, so from, oh, you got any questions there?
Yeah,
Or
so this is the Nasdaq versus the S&P 500.
yeah.
Okay.
So right here, this vertical line here, which starts this trend upward with the green line, as it continues to get higher, moving higher highs, the relative
Mm,
strength of those buys going up is going down. So the Nasdaq, which is the first part, is starting to get weaker in terms of its strength. Meaning, that's more or less like capital preservation. Could be selling off, going to cash, and anticipating a drop, just like last year in the market. Uh, so uh, what we, in addition to on the RSI, is trading below the midpoint, so you see a
mm,
weakness there. So as the SPY goes, so does the rest of the market in terms of risk off. But there is a light at the end of the tunnel, as you saw before in the other chart. That um, there's always a run. It always runs, things run in cycles. If
mhm,
you catch them. So in addition to when you hear bad news, which we have right now, quote unquote bad news, or a crisis with oil, which I'll get into, which I'll wrap at that, and I'll turn it over to you, Jabari, on that last thing.
mhm.
Um, it always resolves itself at some point, and markets come back to settle and rebound to also. So I just wanted to mention oil as the last thing to wrap, is that looking at chart patterns, this is a cup and a handle on an uptrend. So this is actually bullish. So and so as you see, this is the cup and this is the handle, and it's consolidating, going sideways to also. So you're looking for a break above 104 for it to continue. This is a um, kind of a moderate measured move. When you measure the distance from the low, which is here, the candle, and the high of where the breakout would be. I think I measured this high right here and did a measured move to about 130. That's using the USO oil slash USDT if you're using digital currency. But if you're using the USO futures in on the equity side, you're looking at the target of $156 to also. So what I'm predicting is, if now patterns are patterns, but patterns can either complete or patterns could fail. So if the war ends tomorrow, they come to an agreement, this is going to plummet, dollar is going to plummet, and you're going to see silver, gold, platinum, copper, they're going to spike. So um, there are a number of big players that I've actually seen actually were in gold, and they're actually tapering off. They're
Mhm.
cutting their positions by half, or they've already completed their trade too also. So that's something to look at.
Yeah, and I want to
So
add something there too. I mean, I see
sure.
that upward trend on the RSI,
Hmm.
even though right now we're below the midpoint. Definitely, if we drop below that uptrend, then the trend
Yep.
could be broken. So, and then on the upside, would want to see us break through that bearish divergence, which is the two red lines connecting the lower highs in that 4 hour uptrend. So a break of either way, up or down, will tell you a lot about where this market can move in the very short term. So keep an eye on that.
Exactly, especially if it breaks to the upside, the midpoint, and these downward trending red lines. In addition to this resistance line, if it breaks that, it's definitely I would say it's more likely to hit 130. And as Jabari said, you break to the downside that trend, we're gonna drop. Probably good news that things are gonna be resolved with that crisis. And
Mhm.
yeah, and that's what I have. I don't think I have anything
Alrighty.
else.
We're
Yeah.
we're running pretty solid on time. We're at 25 minutes, which is good. We got a comment, by the way, and I encourage you guys to comment and give us any constructive criticism. But one of the comments was try to keep the videos a little shorter, so we're going to try to do that because we know, I mean, time is
Yep.
valuable, and you want to kind of get this information in and out so you can keep on moving with your day. So, with
Oh,
that said, I'll kind of jump into
let's
this. Do you want to show one more chart, or you're good?
Oh, I just want to show oil in real time. This is what it's doing right now because it just opened 26
Mm,
minutes ago and it's pulling back. However, it's still in a range. It's still well, it's clear with
it is breaking
the
that
4 hour.
4 hour.
It's still within. Yeah. Oh, yep.
We got a
It broke
break.
that. Yep. We got a
Uh-oh.
break. So it did go down and break, right?
We still didn't
And but
close though.
this, yeah, it hasn't closed because this is a 4 hour bar. This is gonna close at 8 p.m. Eastern Standard Time. This is on military time. If you look at the bottom, it says 1600.
Mhm.
So that's 4 o'clock. That's the 4 o'clock bar. So at 8 p.m. in, let's just say approximately an hour and a half, it's 6:27 p.m. right now. So in um in a hour and a half, this bar is going to close. Just for confirmation, but it's still in a range to also, so it can either return to the upside or continue. And there was news that I go to that there's going to be possible strikes in Doha and Qatar. Iran is they're telling the military troops to actually leave that area.
Mm,
So we'll see volatility. Expect volatility.
big time, big
Yeah,
time.
yeah, yeah. So that's all. That's what I have. Jabari, you want to wrap it up and see
Yes,
what you have?
sir. I will jump into the paracharger, which is my favorite place to
All right.
be.
I'm gonna stop
Uh,
sharing.
and let me know if you can see this screen, which you should be able to. All right, here we go. So I'm gonna pull this down here so you guys don't see my face twice. Okay. Yeah, so this is a ratio, the Dow Gold ratio. Very important ratio to see, hey, all right, is it best to be in the Dow or is it by the Dow, I mean the Dow Jones Industrial Average, or does it make more sense to be in gold? So, like I said, I just want to zoom out a little bit. Right now, we're at the bottom of the range, meaning that the Dow is underperforming gold. Um, and we're coming up on a close support where we bounced at. Um, We bounced at in the 80s and we bounced at this level in August 2011. And look how close we are to hitting that level again. Very close. So the question
Good.
is, when is that going to happen? And you can see we're trading in this very clear downward channel, right? When we get to the top of the channel, price gets rejected. When we get to the bottom of the channel, price bounces up. So let's zoom in on the weekly chart, see what's going on here. So right now we're right smack dab middle in the middle of that channel. I want to move to the daily chart. And we are forming an inverse cup and handle, which is a bearish formation. So here is basically the cup, the top of the cup, and then we're making a big U here, which is the cup, and then this is the handle that we're forming right here. So the
Mhm,
question this week is to see, do we test the 9 level and break lower? If we break
mhm,
lower, where are we going to go? We are likely going to test this bottom trend line that I showed in the previous on the monthly chart. So keep that in mind. Right now, this is still very bearish, although we can
mhm,
theoretically trade all the way up to this side of the trend line, which maybe the high would be around 10.3, 10.4. Right
mhm.
now, that's very unlikely. I kind of want to just keep a look at this. And in my opinion, I think we may get another test this week, if not a break, either this week or next week, down lower. I think that this trend is going lower. So I think gold is going to continue to outperform the stock market. So
Can I
let's,
bring something to your attention?
yeah, for
If
sure.
you on this chart, if you zoom out just a little bit, because I'm looking at some structure as prior to that, let's see, I think it's a little bit before no November last year. Yeah, keep going to the left. Keep going to the
November.
left.
This is November.
Oh, just keep going to the left, like that dip to the left there. No, to the right
Oh,
a
this
little bit
one?
more.
This one?
Oh, no, no. Yeah, that one. If you look at that price structure, if you zoom in a bit, but keep it
Oh yeah, here's
where
another
you're at.
cup. This is basically another cup and handle, which is kind of what's forming right here.
Right. So that dip to the right there,
Inverse cup and handle. Yep,
yeah, that dip there is the same as the current dip
exactly. So,
with that spike up, that dip with the spike up, and then pull down, kind of like sideways, diagonally downwards. So that's a similar price structure
yep.
that we have, and then also with the repeat of last year, where it spiked down. I'm sure the VIX will spike up too. Also, as you mentioned, a spike anywhere from 30 to 80, the sellers will be exhausted, and the
Mm,
buyers will step in, causing that hammer, and do a run all the way through to the summer, maybe to the end of the year, with a
yeah.
risk on. Yeah, and with the major markets, like the Dow, and also probably the S&P 500 to do the same thing as you mentioned before, risk off, Bitcoin risk off. That probably find its bottom too also.
hmm
Yeah.
So next, I'm going to move from the Dow gold ratio to the gold silver ratio.
All right.
So this is where it's starting to get more and more fun for me.
Yeah, man. You love your silver, man.
I do love silver.
That silver is making it the ducats, man.
Yes. So, I mean, so as we kind of talked about last week, 65 is a very strong level for the gold silver ratio.
Hmm.
When the reason why is because there's significant resistance and support shown in the previous time. So if you could see, like it usually has a hard time either getting above it, or when it does
Hmm.
get above it, it surges up, and then when it drops below, you can see right here we shot down. Here we had
Hmm.
some resistance before popping up, and then we didn't hold above for very long. And then look at this move right here down from 65, like. So 65 is a clear level. Look, we ran all the way up to the top of this bullish channel, came back down and bounced right on 65. And now, I mean, if you look back to the on the daily chart, the gold silver
Yep.
ratio dropped as low as 45, as low as
Yeah.
43 actually, and then bounced way above the 72, and then could not close for long under above 65. So right now, this is a bear flag that was forming on the gold silver ratio. We actually broke
Hmm.
out, but did not confirm. So
Hmm.
we are now trading in above this trend line. So I mean, it's not really looking good in the short term for the gold silver ratio. If you're a silver holder right now, gold is winning versus silver. I don't think that will be for very long, but we kind of have to just watch how things play out this week. As long as just in terms of probability wise, when
Right.
we are, let's extend that line out here. So when we break out of a bear flag or a consolidation like this is a small pennant where we're getting lower highs and higher lows. When we break out in the bottom breakout here in this bottom section, this is the most bearish. This section
Hmm.
here, which would be a megaphone pattern, which is the opposite of a flag pattern, would be neutral to bearish. And then
Hmm.
above here, this would be basically forming another cup and handle, would be the most bullish. So right now, the gold and silver ratio is bullish in favor of gold. So let's see this week if this continues. And kind of we're seeing some interesting things on the silver versus silver SILJ chart, which is very interesting here because we're getting a lot of movement. So this is silver divided by SILJ. And last week I said, hey, keep a look at this because we were previously in this bullish channel, broke above, formed a bullish flag, broke up through out of that bullish flag formation, had a bearish divergence, meaning a higher high in price, but a lower high in relative strength, if you look down the relative strength chart. Then we broke back into that bullish channel. We didn't stay there very long, and we came back down to this support. And now we are trading in what is this megaphone pattern right here, where the highs are getting higher and the lows are getting lower, which is a bearish formation. But last week
Hmm.
we did close back in this bullish channel. So in the short term, we want to keep a very strong eye on this because we could very well, if we continue to close in this bullish channel, silver miners will lose versus silver, which means it's basically risk off for silver and commodities, which is essentially risk on for the market. But I don't want to confuse people here, but What I'm still under expecting is a move down in this ratio, meaning that
Okay.
money is moving from the Dow into gold, from gold into silver, from silver into silver miners. And my favorite is ticker AG, which is First Majestic. I'm going to kind of show you some analysis I did last week, which is really critical. And I was showing Rich this earlier this week, but we've only broken down.
So
Was that?
AG is a silver company or a silver miner?
Yeah, so AG is a silver miner. First Majestic, it's a Mexican mining company. And if you don't know, um, Mexico is one of the biggest producers of silver. So
Okay.
I'm pretty sure it's the biggest. But it's a very cure ratio, and we're coming around 38 minutes here, so I'll try to wrap up pretty quickly. But I think this is really important for you guys to know because every time we break below this ratio, 3.39, it's only happened two other times before. This time in 2016 and the other time in 2010. Let me zoom in on that so you guys can get a better idea of what happens at this level when we break down from this ratio. So the last time we broke down from this ratio, don't want to leave there. I'm going to zoom in. We broke down from the ratio, and as you can see, we came back and tested it. So we tested that 3.4 level, and then we followed
Mm-hmm.
by a move down. And when you look back, that resulted in about a 300% gain in AG.
Oh, nice.
It was about a 40% gain in silver. And then the
Mm-hmm.
first time it happened, so that was the second time. This was the first time it happened. We broke down, and then look, we had a strong pop right back. We actually went above the 3.39 level to as high as 3.6, followed by a strong move down, back into favoring AG over silver. So I mean, and look where we are right now. We're actually in the same exact place. We're at that same point. So I'm very curious to see what happens because if this ratio continues to move up, all bets are off for the short term. Maybe you want to wait until we see a correction in the silver markets. But
Mm-hmm.
I'm watching this carefully because if we do break below 3.9, I will be increasing my position towards AG dramatically. Because history has shown that when we break below this level, it's a relatively steep drop. I mean, just look at these monthly charts. When we break below here, we drop massively. And when we broke below here in 2016, we dropped massively. And we usually come test around, you can say, to be safe, a two level in this ratio. So,
Got a
um,
got a que- I got a question.
yeah.
So that's an opportunity to short silver along silver miners.
So silver versus AG. Um, AG follows silver. So silver AG won't go up unless silver goes up. So
Okay.
you could run a spread and short silver long AG and
Mm-hmm.
collect the basically the spread in between that. So you're basically betting that AG will outperform silver. But
Yeah.
these indicators, so basically when this silver AG pair goes higher, it's bullish
Yep.
for the whole, it's bullish for, sorry, bearish for the whole space because silver needs, AG needs silver to run to rally because AG is
Gotcha.
is essentially a proxy for silver. Just like the gold silver ratio, silver
Gotcha.
follows gold. So if the ratio is going higher in the gold to silver ratio, that means gold
Uh-huh.
and silver are typically falling down because it's rare that silver runs without gold.
Gotcha.
But so key levels to keep in mind. Either way, it's going to be a very interesting week. We got a lot of interesting stuff coming up. We got interest rate meetings. We got the Fed talking this week. We want to see what's going on with oil and this market. If we're going to top out here, if the market is going to close any lower. Right now, we're looking at the 10-year yield finding some resistance, which is bullish for the market. And I want to see what happens with the dollar here. But I mean, there's a clear bearish divergence here on the dollar because not only are we coming up against resistance, but we got a higher high, right? The price is higher than it was before. We made a higher high, but we got a lower high on the 4-hour RSI. And you can see there's consolidation, and then once we break the bearish divergence, we push up. So consolidation, break the bearish divergence, we push up. So I want to see if, and it kind of looks like a head and shoulders actually on this RSI too. So I wonder if we're going to break what the dollar's going to do. I'm not making really any calls this week. I'm kind of being conservative, watching the VIX um, this week and kind of playing it safe. Sometimes it's best to, not take a trade and kind of be on the sidelines. But um, yeah, that's all I really got for you guys this week.
Yeah. Manage that risk. I'm on the sidelines unless if I'm doing any trading, it's gonna be scalping.
Yes, sir.
in and
Yes, sir.
in and out. In and out. Yeah. Yeah.
So,
I had a great show. This is a great show. Great information.
Yes, thank you guys for tuning in. I encourage you guys, please like, subscribe, and share this video. Definitely supports this channel. We're new here, and we just want to keep improving. Our motto is Kaizen, always continuously improving.
Amen.
And
Kaizen.
Kaizen, Kaizen. So,
Kaizen.
so you guys, I hope you guys continue to improve this week and have a good week and
All
stay
right.
healthy. And yeah, I'll see you guys next week. All right.
All right. Hasta luego.
Deuces. Bye.
Jesus. Bye.